All right, I believe we are live. Welcome, everybody. Today is December 8th, 2025. This is the Bookmap stream with DARMA Capital Trading, and my name is Spencer Riegle. I am the Chief Crypto Options Trader and Strategist here at DARMA Capital Trading. If you want to follow along, we are fairly active on X now. You can follow us at DARMA Cap Trading, or you can follow myself at _ just my last name. Or you can reach out to me personally on LinkedIn, and I will get back to you as soon as I can there. Another great way is here in the Bookmap Discord. I'm quite active in there, and more than happy to have conversations on everything that we talk about or markets in general. So before we dive into it, very important that we go through some disclosures. So all information and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. So each week, what we like to start the week talking about, first and foremost, is risk capital. And what we see in terms of risk capital is capital in which you're willing to lose, right? And so what we, in terms of everything in terms of trading, we believe you should only use risk capital, right? And part of the reason for that is if you are thinking about kind of those bills at the end of the month, those groceries at the end of the week, or you are thinking about potentially just some extracurricular events outside of trading, and you need some cash flow for that. You're not thinking about the trade. You're not thinking about what the market has and is presenting to you in the moment, right? And for that reason, it's a lot easier if you just set some capital in which you're willing to lose aside, so that you can stay in that flow state and really focus on the facts. So each week we start off talking about risk because risk is the most important part of trading. All right. Excuse me. But for those that are unfamiliar and kind of catching the recording on YouTube, but we take a top-down approach to markets, right? So typically we take a look at the macro events, so what's kind of happening on the broad landscape of the market, right? So what are some global events that are happening that are influencing prices? And then we really dial it into the weekly, right? Part of the reason we choose the weekly for the duration is we hop on each week. Right, and so if we're less frequent, we may choose a longer duration. But since we're on every week, might as well use the weekly and kind of give those 7-day outlooks and 7-day updates, right? And so beyond that, then we take it a bit further, right? And then we talk about the strategy, which we'll talk about as we go through our playbook for the duration, and then we'll get into just kind of the nuances and the micro liquidity of the market looking at Bookmap. So let's dive over and then we're actually going to get into things quickly today. So on the kind of macro, there's a couple things in which I'd like to talk on. Not a lot, but obviously we have the FOMC this week, which is a large binary event. The market has been kind of pricing in, pricing out over the last 4 weeks. Around those economic figures and all those kind of things. That obviously is front and center as we head into this week's trade and then as we balance out the remaining of the year, right? That matters because books basically anticipate up into the figure and then they have more to do after the figure, right? And so with that being said, next week likely is fairly active, especially with that holiday season really shrinking up those days and where that liquidity probably is, right? And so first and foremost, FOMC. Next on kind of a per asset, Fusaka did go live, and we talked about that briefly last week. And so that's kind of been going on, or that went live in December 3rd. And so more or less the expectation there was it was a positive move for the protocol, right? And so we did talk about reversals last week as kind of our outlook, and markets did reverse, and they reversed pretty well, right? We saw Bitcoin early on trading lower and broke off the open of the month and then quickly reversed, and we got close to a 95,000 print, right? Which was kind of that first barrier that we were looking at. Ethereum performed as well, and we got close to 3,200, and so quickly we've diverted back from there. But for the most part, some of those positive catalysts did play into, but more or less the market's kind of just waiting for end of year flows and obviously that binary event this week. So let's take a look at the weekly update. So first and foremost, this is our website. So for those that have not visited, I highly encourage you to, just to give us feedback at the very least. But DARMA Capital Trade is the website, and this is everything about us, right? So you can see anything from the About, Advisory, Analytics, Academy. Today specifically, we're going to talk about our analytics, but everything within what we talk about today is free in our free academy. And so if you want more in terms of depth of knowledge on the analytics that we talk about, everything beyond that, head over to the sign up page, and all the way on the right side, you'll see a free trader assessment and education, right? Free trader assessment basically is an emotional test to help you understand who you are as a trader. And it just gives a better general awareness to you as you step into the markets, right? We see that to be incredibly impactful. One is knowing thyself, self-awareness. But two, we typically break up traders into three different categories, right? And so part of that helps you understand who you are as a trader, and then you'll be able to kind of enter into the data and analytics side with that lens. So all that's free. Everybody likes free stuff, so I always talk about that to start. And then obviously the academy. Once you go through kind of that sign up, you'll notice that there are tons of education here, quizzes, modules for you to dive into to really get a better understanding of what we're about to talk about right now. So without further ado, let's dive over to the price map and let's get started. So the first market that we're going to talk about is going to be Bitcoin, and we're going to dive into it on the weekly basis. And on the left here, all the way on the left is price map. We support multiple different durations. We have a quarterly and a yearly as well. But here on the site, you're just going to see the daily, weekly, monthly shown. And then on my right is Bookmap. So what we're going to do here is we're going to break down price levels on the left. We're going to go into the playbook, right, which helps you understand kind of the themes that are going on within the price map. And then we're going to go all the way to the right and see where that correlation is with active buyers and sellers in the market, right? And so let me zoom out here for the weekly. And so the current state of the market, we break down each market in terms of state, structure, and then we go into the strategy. So the current state is a bear trend correction. So a market in a bear trend correction is a signature state and has produced a positive signal against a negative trend. The market is vulnerable to the downside, however, does have the potential to produce a counter-trend corrective rise. The market is searching for resistance. Price action is characterized by stop-and-go trade with sharp positive reactions. Positive correction action can disappear quickly, so avoid leveraging up on any rally as the negative momentum will try to reestablish itself. This is a money state, as good trade action is expected. The market has played a card and will continue to tighten the collar on weak short positions or revert to a negative bear trend structure. Don't fight negative momentum below the current session's midpoint, as any new negative structure has the potential to be the start of a new trend move lower. So current midpoint here, previous week's mid is right here. So we broke under it initially off the open of the week, and then that has acted as the base ever since in a stop and go action. Structure on the week is negative, right? So sentiment bias is negative, and the reason for that is the R level is above the directional, stationed right at the upside target number 1. So the R level at the upside target number 1 defines the price range between the UP to the UT1 R level as the expected exhaustion area for any positive push. If the bear trend is going to resume, the market will reject in this area. Look for reversal signals to add to with confirmation. A held breach of the R level has the potential to transition the market into a neutral or positive state. A false breakout or reversal is potentially the top of the next move to new move lows. If the market trades under the directional, it should remain below that price point in the bear trend if the bear trend is going to engage. Work any negative structure as there is potential for a multi-session decline. If the market can't maintain a trade below the directional and instead trades back up through it, the expectation should be for a difficult sideways digestive trade with the R level being the upper lid. So, it's currently exactly what we're in. The strategy for the session, right? Optimal strategies are focused around the R level and the UP, right? And so kind of building off of the first two here with the market breaking under the directional and then quickly basing over the directional. And now we are positive over the previous month's close. All eyes look to the UP to the R level as kind of this exhaustive lid on the market for the week that you can see here in this figure, right? So anywhere from 94,710 up to essentially 100K is kind of that exhaustive lid. Let's talk even a bit further in terms of some of those more minor levels and where those validations matter. Currently, we're over the previous month's close. So last week in particular, we talked about reversals. So we got that initial break, but we were looking at buy DP reversals, right? And so we got that buy DP reversal, and quickly in the next 24 hours, right, over that Tuesday night, that Wednesday that we talked about, immediately we got that reversal. Buy DP reversals need to be quick for the reason shorts should not have an opportunity to get out, and they add buying pressure, right? So we got it. That put us over the previous month's close, and then we quickly traded right back under it. Previous month's close always is a very important figure, especially for the first 7 days of the month, and then the last 7 days of the month, right? So over it's positive, and then you have obviously you have alignment here, previous week's mid, previous month's close. Where does it target? Previous year's close. Again, we've been talking about the yearly figures for the last couple of weeks being very important. They continue to be very important. The reason for that is that defines the year, right? And so we have 2.5 weeks basically left of trade. In crypto, we have a bit more, but this figure in itself defines a positive year for Bitcoin or a negative year for Bitcoin. So that really matters. Beyond that, then you butt up right into the UP to the R level. So previous month's close, next 12 hours really matters that we hold here. Previous year's close, and then you have this resting exhaustive lid. If the market's good and really rallies here, let's say with the FOMC, any base over 100,000, that it has the ability to go over this green, top green dash line here, which is the positive alert distance of the R level, is positive, right? And that has the potential to shift this market state into a neutral, if not a bull trend again, right? Quickly, where does that immediately target? UT2, right? Which is your previous quarter's low as well. But more importantly, if we're focused on yearly levels, previous year's high for some of that exhaustive extremes up here. So that is the strategy for Bitcoin on the week. If we do wind up breaking down, let's say previous month's close, more importantly, previous week's mid, right? Based on the state, midpoint of the previous session, right? So current session midpoint. Then expectation is DP down to the previous week's low. Beyond that, DT1, right? Don't fight negative price structure this week. Expecting the market to base is basically what this playbook is saying. And if it is going to base, know that it has the opportunity to really squeeze some shorts during the session. So that's why it is a money state. Bookmap on the right. Where do we have resting buyers and sellers? 89,200 basically, right? 89,300. Alignment down here at the previous week's close, so it makes sense. And then we have resting sellers at 94,400 and 94,600. So right at that UP level, right over the previous week's high, and then about 1,000 points over the previous year's close. So that becomes a very interesting level, UP in particular. So let's dive over to Ethereum next, and then we have the ES futures as well that we can dive into. Awesome. Okay, so here is Ethereum. Again, we're going to pull up the weekly, and we are in the same signature state. So I'm actually not going to read it again, but same thing. It's a money state, and as long as we base over the directional, the expectation would be the UPR level. Under it, don't fight it, because we are technically still in a larger bear trend in the shorter period in time. Structure. So the structure is negative once again. So the R level above the UP, but below the UT1 defines the price range between the R level and UP as the expected exhaustion area for any positive push. If the bear trend is going to resume, the market will reject in this area. Look for reversal signals in this price zone. A held breach of the R level has the potential to transition the market into a neutral or a positive state. A false R level breakout or reversal is potentially the top of the next leg of the bear trend to new move lows. If the market trades under the directional, it should remain below the price point if the bear trend is going to engage. Work any negative structure with a trade vision of multi-session decline. If the market cannot maintain a trade below the directional and instead trades back up through it, the expectation should be for a difficult sideways digestive trade with the R level being the upper lid, right? So same thing, same state, different structure, right? So we have the R level a bit closer to the market. Bitcoin, we have the R level at the UT1. Ethereum, we have it actually at the CRX Plus, which is one level lower here. Strategies are optimal, sell R fade, sell UP reversals, right? And so the focus is basically within fading or looking for reversal signals at those exhaustive lid points. And then on the hedge themes, you can see down here, if you get a break, the expectation is a breakdown to the DP, so 2769. But the hedge theme would be a buy DP fade, right? So a market that can't break through and holds to the figure, the expectation would be to fade it right back into this digestive, sloppy action. So currently, where do we stand, right? We're over the directional. We tried to break, could not validate under the CR minus, right? And we quickly priced right back through it. Now we are holding the directional almost to the figure here. You can see most trade is rotating around it. And now we're over the previous year's mid. Again, we are targeting previous year's close to the R level. So UP to the R level. UP encompasses all of these major levels here. So previous month's mid, the UP figure, previous year's close, and then we have the R level above it, right? So that becomes very important for the week. So 3302.36 up to 34.35 for potential exhaustion sellers. And then below 3025, don't fight it. Look for the DP. If the DP can hold, the expectation is a fade. Risk under basically the previous week's low. Otherwise, a market that's making negative price structure, right, and starts to trend lower is not a market to fight. And the expectation on both markets currently is choppy trade. So careful within leveraging at any point that's not within an optimal risk zone, right? So on the right side here, where do we have resting sellers? 33.10 and 33.20. Exact alignment here with the UP. And more importantly, right in front of that previous year's close. So again, yearly figures really matter, and they will continue to matter for the next few weeks, right? To the downside, bids 3,000. So defining basically this lower bound of the directional. That matters again because the market needs to hold under the directional and continue to produce negative price structure. And price structure is higher moves high and then lower moves low, right? For both trends, right? So a bull trend and then a bear trend. And then inversely, we have 29.85. So right in that area as well. Both very important. Previous month's close, you have buyers kind of just resting there around it. So in the book, we see alignment on both levels. Both of those levels matter a lot. In the next 12 hours, really what you want to see for kind of an exhaustive lid is a bid over 31.64 for a test of that UP. Again, based on the state and the structure, could get pretty sloppy this week. So don't expect to leverage up and really press the market until you're in these key zones that we talked about, right? So UP to the R level and the DP on the downside. So that is Ethereum. Let's jump over to the ES. And make sure that all right, perfect. Okay, so hey Steven. Yeah, I see your comment. Glad to have you on. I'm not sure where RJ is, but I'm sure he can catch the recording. He enjoys the ES. So, all right. So for the ES, current state, right, is in a bull trend. So this is signature state. It's typified by a market that continues to make higher move highs and higher move lows, or positive structure. If the market continues to hold structure, further gains should be expected. This does not mean there cannot be corrective setbacks, but rather any negative price action is expected to exhaust above the lower inflection point that will maintain the structure. Any failure or break in the positive structure is more likely to produce a neutral shift rather than a negative transition. A quiet market is likely to turn positive, especially later in the trade period. Typically, if the market is going to trend higher, it will demonstrate that with positive intraday price structure. If not, a firm digestive trade is the outlook. So currently, the structure is positive, right? So the R level is equal to the DP. That's our sentiment bias for the week. Under the directional means it is a positive sentiment bias, right? So the R level equal to the downside pivot defines the base supporting the positive market structure. If the market is going to continue its higher move high and higher move low campaign, any weakness will bottom out above here. The market is in buy mode, so look for excuses to get in above the R level. A breach of the UP should produce a pop on the initial breakout if the market is going to extend up to the UT2. A lackluster UP breakout signal has the potential to turn the trade to digestive with the directional defining the positive structure breaking point. The R level is a hard base for the bull trend, and a failure does have the potential to derail positive momentum. Don't fight negative price structure below the R level, as the potential for a sharp corrective sell-off is real. So current strategy. The market is in a bull trend with the R level equal to the DP. This is a power stance for positive trend with the R level defining the structure low point, right? So here at 67.87. Expectation is that the positive momentum will continue to build momentum and not look back. Any hesitation in the trend is a sign that the trade may turn digestive, whether the market is trading above or below the DPR level. A break in momentum above the R level will be more bull trend digestion, and below the R level, bull trend correction. Use the buy or fade for optimal entry to participate in any new bull trend. Add to any long position with a bi-directional strategy with the trade vision of the new extension higher in the magnitude of at least 2 APMDs. A UP breakout is needed to confirm a new leg of the bull trend. Incorporate the sell UP reversal to protect profits and participate in a pullback down to the directional. Okay, so let me break it down for kind of reading through everything. So basically, the market started out positive, kind of rotating around the directional. We're in a bull trend. The sentiment's positive, but today, in particular, we closed under it, right? And more specifically, we also closed under key levels, right? So previous month's close, previous week's mid, and we're just over the CR minus. So currently, we are in a sell directional breakout within a bull trend, right? That's a reason to size down, right? Where does that validate? Validates under 6823.5, right? Targeting the R level. R level is where you'll see the optimal place to deploy risk capital this week, right? And so that is a buy or fade. How do you fade an R level? Market comes into the figure and produces back over the previous week's low, right? So into 678799, it should hold, right? Basically within 20 points, within 10 points. Otherwise, it's at risk. And then it should rally. How should it rally? First and foremost, we have the previous week's low alignment here. So basing over that, incredibly important. Next is CR minus here. These CR plus and CR minus act as validation rails inside major price map levels, right? So a break under is your validation on the sell directional breakout down to the downside. Your break over would be your validation on a buy or fade back to the directional at the very least, right? And then what this commentary is also saying is for that trend to re-engage without kind of going sloppy on you, it then needs to produce a bi-directional breakout in combination with that buy or fade validation, right? So one step down, you get your validation off the CR minus, back over the CR minus, and then you get your confirmation on any additional adds that you're looking for over the directional positive alert distance, which is 6887, right? Market needs to perform perfectly for it to continue to press it, right? What you can see down here on the right side, and I don't know if it's easily accessible, but you'll note that it has this typical higher move highs, lower move lows, trending state within a bull trend. That's currently what we've been in, exactly what we've been in, right? You can see it, right? For this to continue, the expectation was that, or is that it continues in that same light, right? Where do you look to the upside for potential heat checks? The UP. So if immediately you get a price through the UP that rejects, or through the UP positive alert distance that reverses, those are two signals that say this trade for the week, for this duration, could turn sloppy, and that's a reason to book some profits as well. So upside, you're looking at the UP. Downside, you're looking at the DP. A break under the DP is not a market to continue to buy the dip, right? There's two key levels here that we're looking at as heat checks, right? It's so easy to just buy the dip because it always works without knowing why you're doing it or where you're doing it or optimal entry. Currently, we're in a sell directional breakout. We don't really have more information beyond that. And the bull trend is at risk, right? Why? Once we validate under here, it has one more level to test, right? If the optimal area to deploy risk capital this week is at the R level, there's no need to be 100% all in here under the directional. Why? Because you can just buy it over the directional, right? If the market breaks down here, that's the area to look for that optimal risk entry. 10 points of risk for a reward that's far greater, right? Or previous week's mid, previous month's close. Basically, it's 30 points of risk to buy it higher, right? So buying it lower here, being sized down appropriately, knowing that you don't need to be all in here to look to buy here. And then this is the next key level, right? If you were sizing a trade. Here, there's merit to say why you would be pressing a long-sided trade. 10 points of risk, there's no merit, right? So the risk is tight, the reward is great. And under the R level, right, this week, it's not a trend to fight, right? Because, back to the state, any break in the positive structure is more likely to produce a neutral shift rather than a negative transition. Where is it at? Oh, the R level is a hard base for the bull trend, and a failure does have the potential to derail positive momentum. Don't fight negative structure below the R level, as the potential for a sharp correction sell-off is real, right? So 2 key figures to watch. Currently, we're under 1, so there's no reason to press this trade. Where to press it would be back over, and the market needs to maintain and hold. And then again, the R level is the most important. So that is the outlook for Bitcoin, Ethereum, and the ES for the week. And we can open it up for some questions. And if there are no questions, we will we'll close it down and hope everybody enjoys the week. Okay, perfect. Yeah, Steven, if you watch the recording and you run through some questions, feel free to drop them in here and I'll answer them. So enjoy the week, everybody. And if you're catching the recording and need some questions answered, join us in the Discord and I'll get through them as soon as possible. Yeah, enjoy the week.